Welcome back to Finance Supergirl, your go-to source for empowering personal finance knowledge. In today's video, we're diving into the exciting world of alternative assets and exploring why investing in them can be a game changer for your investment portfolio. Get ready to unlock the potential of alternative assets and discover the key factors to consider before diving in. Let's get started. Section 1. Understanding alternative assets. Before we dive into the types of alternative assets, let's understand what they are and why they are gaining popularity among investors. Alternative assets are non-traditional investment options that go beyond traditional stocks and bonds. They offer unique characteristics and potential returns that can diversify your investment portfolio and enhance your overall financial strategy. Section 2. Exploring different types of alternative assets. There are several types of alternative assets to consider when expanding your investment portfolio. Let's take a closer look at some popular options. Private equity. Private equity involves investing in privately held companies that are not publicly traded. This asset class provides opportunities to invest in growing businesses and can potentially deliver higher returns. For example, let's say you invest in a private equity fund focusing on technology startups. If one of the startups within the fund becomes a major success, your investment could generate significant returns. Private credit. Private credit involves lending money directly to companies or individuals, bypassing traditional banking institutions. It can offer attractive interest rates and the potential for steady income. For instance, you might invest in a private credit fund that provides loans to small businesses. The interest earned from these loans can provide a consistent income stream. Hedge funds. Hedge funds are investment vehicles managed by professional fund managers who use various strategies to generate returns. They aim to provide positive returns regardless of market conditions, making them a popular choice for investors seeking diversification and potential downside protection. For example, a hedge fund might employ a long-short strategy, where they simultaneously buy stocks that will rise in value, going long, and sell short stocks they believe will decline, going short. Real estate. Real estate is another popular alternative asset class with long-term appreciation and income generation potential. Investing in properties such as residential, commercial, or rental properties can provide diversification and potential tax benefits. For example, purchasing a rental property can generate rental income and benefit from property value appreciation over time. Art, wine, and collectibles. Investing in art, wine, and collectibles can be both a passion and an investment opportunity. These tangible assets have the potential for appreciation over time. For instance, investing in a rare piece of artwork or a vintage wine collection can yield substantial returns if its value increases over the years. Section 3. Why invest in alternative assets? Now that we've explored different types of alternative assets, let's discuss why they can be valuable additions to your investment portfolio. Diversification. Alternative assets offer diversification benefits with a low correlation with traditional asset classes such as stocks and bonds. This can help reduce overall portfolio risk and enhance long-term returns. For example, during a stock market downturn, alternative asset investments like real estate or hedge funds may not be as affected, helping offset potential losses in your portfolio. Potential for higher returns. Alternative assets often have the potential for higher returns compared to traditional investments. They can provide exposure to unique market opportunities and niche sectors that may outperform during certain economic conditions. For example, investing in private equity can offer substantial returns if you identify successful businesses with significant growth potential. Inflation protection. Certain alternative assets, such as real estate and commodities, have historically acted as a hedge against inflation. Investing in these assets can help protect your purchasing power and maintain the value of your portfolio during inflationary periods. For instance, owning real estate can provide rental income that adjusts with inflation, helping to preserve your wealth. Section 4. Key considerations and risks. While alternative assets offer exciting opportunities, it's essential to consider potential risks and factors to watch out for. Here are a few key considerations and risks associated with each type of alternative asset. Private equity. Private equity investments often require a longer-term commitment, and it can take several years to see a return on your investment. Additionally, private equity investments can be illiquid, meaning you may be unable to sell your stake easily. Proper due diligence and understanding the investment strategy of the private equity firm are essential before committing to such investments. Private credit. Private credit investments can be subject to default or credit risk if the borrower fails to repay the loan. Due diligence on the creditworthiness of borrowers and a thorough understanding of the terms and conditions of the loan are crucial before investing in private credit. Hedge funds. Hedge funds can be complex and carry unique risks. They often use sophisticated investment strategies, resulting in higher fees and increased volatility. Additionally, hedge funds may have limited liquidity, which can be challenging to redeem your investment quickly. Thorough due diligence and understanding of the fund's investment strategy and risk management practices are crucial before investing in hedge funds. Real estate. Property values can fluctuate, and there can be risks associated with tenant vacancies, property management, and financing. Additionally, real estate investments can be illiquid, meaning it may take time to sell a property if needed. Thorough research, understanding local market dynamics, and proper financial planning are crucial before investing in real estate. Art, wine, and collectibles. Investing in art, wine, and collectibles can be both a passion and an investment opportunity. However, it's important to be aware of some key risks and limitations associated with these alternative assets. Authenticity and valuation. Verifying the authenticity and determining the true value of art, wine, and collectibles can be challenging. It requires expertise, research, and often the assistance of specialists. Without proper knowledge, there's a risk of purchasing counterfeit items or overpaying for a piece that doesn't hold its value. Liquidity. Host. Unlike publicly traded assets, art, wine, and collectibles can have limited liquidity. Finding a buyer and completing a sale might take time and could be subject to market conditions. It's important to be prepared for potential delays when selling these assets if the need for liquidity arises. Storage and maintenance. Art, wine, and collectibles require appropriate storage and maintenance to preserve their value. Climate control, security measures, and proper handling are crucial to prevent damage or deterioration. These considerations add costs and responsibilities to owning these assets. Market volatility. The market for art, wine, and collectibles can be volatile and subject to shifts in trends, tastes, and economic conditions. The value of these assets can fluctuate significantly, and it's important to be prepared for potential market downturns or changes in demand. In conclusion, investing in alternative investments can provide unique opportunities to diversify your portfolio, potentially enhance returns, and protect against inflation. However, it's important to carefully consider your investment goals and risk tolerance, conduct thorough research, and evaluate potential risks before venturing into alternative investments. Remember, always stay informed and keep up with changing market conditions. If you found this information valuable, be sure to give this video a thumbs up and subscribe to our channel for more insightful content on personal finance. Thank you for joining us today. Stay financially savvy, and we'll see you in the next video on Finance Supergirl.